Very much, Mark Carney. Hope Sarah's sitting down because he is calling for the creation of a new virtual currency that could ease the reliance of the world on the U.S. dollar, which he says creates some of the problems that we have today. He's pointing out that, for example, half of all international trade is priced in dollars, but the U.S. that's 5 times greater than the U.S. contribution to world output, along with 2/3 of world securities priced in dollars. And he says the problem there is that U.S. interest rate policy, U.S. exchange rate policy becomes exported to other parts of the world. And he says that is not the optimal way to run things. And why are we having so many problems related to the U.S. being strong, but the rest of the world being weak? And he says that's because so much of the world is priced in dollars. So the theory of flexible exchange rates resolving these imbalances is not working. You know, Sarah, this is not the first time this idea has been talked about or floated. Yeah, I mean, I think what he might be getting at here is this idea that the U.S. is affecting the world beyond the amount which the world should be affected.
As we speak, we have conversations with various representatives of China. I believe that will all work out very well for everybody. China, Japan, the United States, and everybody in the region. As far as the currency devaluations, I've been complaining about that for a long time. And I believe that we will all eventually, and probably very much sooner than a lot of people understand or think, we will be all at a level playing field, because that's the only way it's fair. That's the only way that you can fairly compete in trade and other things.
This is a real issue. We estimate around half of SMEs do not go to the banks, to the formal financial system to finance. So that needs to change. There needs to be greater access to finance for small, medium-sized enterprises, and because we also do think that the nature of commerce will increase, cross-border trade will increasingly have a SME component, which goes in part to your second point. And so the question is what can be done, and what is the potential role of new financial technologies in helping to bridge this gap and actually provide more competition for those who do go to the formal banking system. And so this is within this set of issues we're looking at the bank. This is if not the top, one of the top 3 priorities. We think that there are things that we can do with our core infrastructure, our payment system, and the access to other central bank facilities that can materially change the access to finance of SMEs. Not by us, not directly through us, but creating the framework for new SME providers to be very active here. Now, I'm not fully laying out exactly what we're contemplating doing, because we want to make sure we have everything lined up. So as a small commercial, I would say watch this space over the course of 2019 for something substantial on that.
Making U.S. companies competitive. We need to create a level playing field for U.S. companies to be able to compete in the world, and they just haven't had that opportunity.
We've got European engine, we've got the Chinese engine, we've got the U.S. engine of this economy. Multipolar world, you need a multipolar currency. The question is, how do you get there? And I laid out some ideas of how you would get there.
So I think the role of the disruptors and anything that is using distributed ledger technology, whether you call it crypto, assets, currencies, or whatever, and it's far from the bitcoins that we used to talk about a year ago, that is clearly shaking the system.
And when you think about all the people who send money, they may work in one country, send money back home. They generally do that through organizations that charge 5 to 10%. Yeah. There is a need, whether it's a Libra or something else, to democratize the exchange of foreign currencies. Today, with computers and electronic market,
there shouldn't be that.
It should be 10 basis points, 5 basis points.
That
it's
makes
not
sense.
percent. And so I actually believe the idea around Libra, I don't think we need to create a new currency, but the technology to instantaneous calibrate all the currencies, that should be done.
I think we are about to see massive disruptions, but clearly the way in which the new technologies are lowering the cost to make financial transactions more accessible, even in very small numbers, for people who do not earn much, who do not deposit much, and who do not borrow much, I think is already massively disruptive. The voice that we heard, which was, I thought, really interesting, were those of the regulators and central bank governors who said, well, yes, this is good and this is helpful and it is changing the business model of commercial banks. But we have to be mindful of two things, trust and stability of the system. And we are equally concerned, we at the IMF, about stability. We don't want innovation that would shake the system so much that we would lose the stability that is needed.
Having thoughtful regulation and working with governments. We announced the fact that we're working with the Bank of England as an example. We announced some things we've done with the US Fed and their faster payments task force. We're going to keep working with the system because I think the early days of Bitcoin were all about down with government and down with banks. Ripple has been, look, governments aren't going away, banks aren't going away. Let's work with the system to dramatically improve the way and reduce the friction for how money moves globally.
The genius, if you will, of cryptocurrencies is that, as we all know, they're distributed. They cut out the central banks, they cut out the banks, and they're ideally directly peer-to-peer between you and I. And so the challenge for payment systems is to move in that direction so we can instantaneously move money from my account to your account to the publican's account, the guy who runs the pub, directly. And what we're doing at the Bank of England is we're reorganizing the core of the system in a way that allows new payment providers to just plug in. They could be using distributed ledger technology, they can use other technologies, and we're in a position where these innovative so-called PSPs will be able to provide those types of services. You're seeing similar innovation amongst banks in the US, other places, and so this is coming.
But look, the Bank of England is a paid customer of Ripple's.
So while our research on a possible future CBDC will continue, we're more excited at the Bank of England about the opportunities to transform digital payments now. In particular, the combination of the bank's overhaul of RTGS, that big central payment system, and new technologies promise payment systems that can better serve society's demands for fully reliable, real-time, and distributed peer-to-peer transactions. Now, RTGS is already pretty awesome, but it's also the same age as most of the students watching this, so we're in the process of renewing it. And this could mean more than you might think. Now, the good news is that non-bank payment providers, PSPs, can now access RTGS, and we expect the first of them to do so directly this spring to help drive costs down and service up. So what can that mean? Well, innovative PSPs can deliver a world where you can split around in the pub electronically and instantaneously, needing nothing more from your friends than a QR code on their phone or their mobile number. By doing so, electronic money is effectively becoming much more like its physical relative, allowing genuine, immediate peer-to-peer transactions without the need for a middleman. Our overhaul of RTGS is helping to reduce complexity and costs in other areas, such as cross-border payments, but the bank is leading the efforts of other central banks and the private sector to use central bank money in cross-border payments through synchronized RTGS systems. Finally, at the wholesale payments end, the bank believes that the distributed ledger technology could potentially save tens of billions of capital, pounds of capital, currently tied up in settlement, while settlement completes. And while the best of the private sector are working hard to find ways to unlock this value, that tens of billions of capital.
The problem we talk about, these pre-funded accounts, the liquidity that the Bank of Andy wants to park at other banks, there's over $20 trillion parked in pre-funded accounts around the world. This is dormant capital. We're solving a problem measured in the trillions of dollars, and if we can activate that asset, if we can make global commerce more efficient, there's an opportunity to drive a lot of velocity, a lot of demand, and a lot of volume across XRP. We are just at the starting line. I also said, look, I think we've taken the first few steps of a marathon, but what I can also say is we've crossed the starting line of that marathon, and really no other companies in this space have. I think a lot of what you see happening in the space, there's science experiments, there's tests. We have production customers moving real money, both with XRapid, with XRP, as well as with our kind of fiat to fiat.
So RippleNet is trying to take on Swift. What's been the traction like? Who's come on board?
Well, it's interesting as you step back and look at this. If you and I decided we were going to send $10,000 to California today, the fastest way for us to do it would be to drive to the airport and fly it there. That's a crazy thing to think about when you're in the age of the internet and we're used to information on demand. When we think about the customers that have come on board, it's because we're solving that real problem. We're changing the nature of a payment taking days to settle to California to seconds. So we now have well over 100 customers ranging from some of the biggest banks in the world to payment providers to the Western Unions and MoneyGrams, Linlan Pay out of China.
How many banks?
It's over 100. I actually don't know the exact number now. Last time we announced it publicly, we said over 100. We'll probably announce the next one when we get to over 200. We're signing up more than a bank a week now. The way correspondent banking works is pre-funded capital sits in accounts around the world, and you have literally $10 trillion pre-funded into other banks, into other financial institutions in order to facilitate. It's the oil in the engine that allows correspondent banking to work, and it's sitting there. And if we can reduce the amount of oil necessary in the engine, that's incredible efficiency for the global economy. That's good for everybody. If we can remove 10 trillion to a lower number, that's stock buybacks, that's dividends, that's working capital for lots of other purposes. So while on the global macro scale, we're still just getting started. I think we're on mile 1 of a marathon, but we've crossed that starting line. This is real activity in production systems where customers are really benefiting from that. We clearly have a long way to go, and the overall maturity of the digital asset market, I think, has a long way to go. But if we keep going back to let's focus on a real problem and solve a real problem for real customers, I'm really optimistic.
You have several products. We talked about the system, RippleNet. You also have a digital token, which is the XRP. How is the XRP doing? Because we saw it surge 1,300%.
Right. So XRP actually was the best performing digital asset in 2017. It was up, I think, something like 25,000%. The excitement around digital assets is because I think you're solving a real problem. And I think one of the things you saw happen, particularly last December, is there's understandably concern about regulation and what does that mean for digital assets. From the get-go, Ripple has worked with regulators, and we have worked with regulated institutions like banks where there isn't regulatory uncertainty. And so we have found that part of the reason why XRP has performed well is because people realize, hey, wait a minute, back to your question, is XRP the next Bitcoin? If we work with the system to solve this problem, and we can solve that problem at scale, a problem measured in the trillions of dollars, then there's a lot of opportunity to create value in XRP. Well, part of working with those companies is we announce when they're ready to announce. You know, there are a lot of rumors about the American we are working with American Express today, for example. There were a lot of rumors about that had leaked out of American Express. We didn't confirm that until American Express was ready to confirm that, which we made public in, I think, November. So we've publicly shared we are working with 3 out of the 5 largest in the world. We'll publicly, make those announcements with those customers when they're ready.
Being open to change, embracing it, shaping it. Technology will change us. So we should change as well. In the world of fintech, we need to harness change so it is fair, it is safe, it is efficient, it is dynamic, it is inclusive.